Back to the Cardone Zone, where every Monday I come to you to talk about real estate investing. Today, what would I do with $5,000 in a real estate deal? I get asked this question every single day in comments on the YouTube channel. By the way, when you subscribe and comment to our shows, you have a chance of winning 100 bones. Last week's winner, Ed Mercer and Alex Demachi. That is for Friday and Saturday. $100 winners, that's $100 cash. If you want to use it at my store, you can. I think we double it at the store. That's what we ought to do. $100 to $200 at the store, okay? Maybe no, just do like $150 at the store. Look, more importantly, I want to talk to you about what would I do with $5,000 in real estate today. Okay, with the $5,000, and we opened CardoneCapital.com, we opened at a non-accredited fund. Very few companies in the world allow a non-accredited investor to invest directly into real estate in America today. Just so you know that this is something that's not being done by almost anyone else. When they do, because these properties, these organizations, LLCs, limited liability corporations, we create and we put real estate deals inside the LLC. Okay? Most of the people, when they offer this, they turn it into a piece of paper. And so you're investing in the paper. We cut out the middleman and allow the non-accredited investor. The law was just changed about 14, 15 months ago where non-accredited can invest directly into this. So what I did was I created a fund where you can invest directly into this. And every day I get asked this question: Grant, if I got $5,000, should I do a deal by myself or should I do it with you? Okay, so I'm going to show you where you'll be better off, and for everybody it'll be different depending on the deal. The deal determines where you're going to make your money, okay? Nothing, you could do 100% of a deal, 100% of this deal, all the work, all the time, the loan, et cetera, and you could still do a better deal even if you only own 1% of this, depending on the deal. If I'm doing bad deals, it doesn't matter what the structure is. A bad deal is a bad deal. And great deals are great deals. So remember this, number one most important thing you should be asking is not what's my return, what can I expect? Ask about the deals, because your money is going to be invested not in a piece of garbage paper, okay, like a stock. I had a well-known celebrity hit me this morning and said, hey dude, what stocks should I be buying right now? None. You should not be buying stocks right now, folks. Not if you're trying to accumulate and create wealth and use leverage to get there, okay? So the reason I buy this stuff right here is because, remember this, if I'm buying a deal, okay, imagine this. If I buy a deal for $3 million and I put $1 million down and I keep this thing long enough, let's say 30 years, I paid $3 million, I put $1 million down. That means I bought $3 million worth of assets for only $1, for $1 million in this case, all right? The $2 million of debt is paid down to zero in the next 30 years. Okay, what do I owe 30 years from now? Nothing. If it didn't go up in value, if rents didn't change, if nothing good happened, I am now worth $3 million and I only put $1 million down. I tripled my money. Any way you cut this, that is a triple. Do you understand? And during the 30 years, the only way I kept it 30 years was it had to cash flow. If it wouldn't have cash flowed, you couldn't have kept it. All right? Now, if I was starting today with $5,000, so when this major celeb asked me today, hey dude, what are you investing in? I'm like, bro, look, knowing what I know, I cannot invest in anything other than what I'm buying. Because if I had $5,000, I'm going to put $5,000 in a piece of real estate. And I'm going to be happy to earn 5 to 10% a year. Okay, 5 to 10% of the year on that would be $250 to $500 a year. And you're like, well, that's no money. That's no money. This is no money because that's not a lot of money. You understand? Watch. If this was $1 million, the same $1 million, I would earn $5,000 to $10,000 a year. No, I'm sorry, $50,000 to $100,000 a year. No, a year. That's a year. That's 50,000 or 5,000 a month, 4,800 a month actually, and $100,000 a year. So if I invested $1 million in a piece of real estate, remember that piece of real estate I bought back here? $1 million, $1 million, $1 million today in today's marketplace buys $3 million worth of real estate because of debt, because of what's called leverage. That's why I love real estate. I cannot do that in the stock market. I can't do it in Bitcoin. You can't buy $3 million worth of Bitcoin with $1 million. And tomorrow, that $3 million of Bitcoin will be worth less or a little more. Who knows, right? But it's not going to pay you every month. See, you want all the ingredients. To build wealth, you want protection. Number one, protection. Number two, you want income. Number three, you want this thing to pay up one day. The way we do that with real estate is we use leverage, okay? I borrow money on the $3 million, put the $1 million down, borrow. Let me go back to our example of the 5,000. See, this is the problem with $5,000. $5,000 in real estate will only buy $15,000 worth of real estate. So, yeah, dude, that's a rehab at our properties. We buy properties. I'm going to rehab my unit for 15. See the problem? Now, what you could do in the real estate game is you could find somebody that bought a unit and doesn't have the money, and they need to borrow $5,000 to fix the kitchen. And then you would charge them 10 or 12% on that $5,000. But now you're chasing money. So if you want to play the real estate game, you want to take $5,000. Here's the thing you should be doing: peer-to-peer lending. You should be doing peer-to-peer lending and lending people money at 10 to 12% that are fixing real estate up. I know a lot of guys buying small deals. Okay, now I'm not going to come to you and borrow $5,000. I'm doing 300-unit deals, 600-unit deals. But there's a lot of guys out there buying 4-plexes and 8-plexes and 12-plexes, and they run out of money. And they're like, I need to do my kitchen, because if I borrow money to do a kitchen, I can raise the rents and pay the debt off. And you do peer-to-peer lending that is backed by real estate, right? But you're a lender now. You're not directly involved in real estate. Okay, the real estate goes up in value. You don't get anything. You just get paid back. So see the problem with $5,000? $5,000 buys what? Oh yeah, it would buy a $100,000 house. You go buy a house, $5,000, buy a $100,000 house in Miami. Francisco and his new wife would say, hey, we're living here. We're going to live in a house. They decide later they're not going to live in it, and they rent it out to somebody. This rents for $1,500 a month. I don't know, maybe $2,000 a month, right? Miami Gardens, maybe. Hallelujah, $100,000 house. Is it hallelujah? I don't say it right. So what? All right. So look. So what he did was he bought a house, put $5,000 down. They got a FHA loan. $95,000 they financed. You're asking me, man. Call me up 305-865-8668, man. I think the phones are probably full already. Okay. His loan on that is going to be $5,845 a year. Is that right? That might be wrong. $95,000 times 0.0615. That is a rate factor, not an interest rate. That makes the payment, yeah, that's right. Per year. Plus property taxes, plus insurance, plus they're going to put him with some hack. They're going to jack him right here because he only put 5% down. It's called PMI, I think. So let's say his payments are $7,000 a year. All in, he's at $7,000, but he's bringing in $2,000 times 12, or let's say $1,500 times 12. What is that? $18,000 a year, $18K a year, and he's only paying $7,000 out. Not a bad deal, guys. Check it out. Okay, he's getting $18,000 in rent. He's paying $7,000 out in insurance. He's making $11,000 if it doesn't cost him anything to mow the grass, paint the house, pick up the stuff, rent out the unit. You're going to have to pay something. He's going to pay 1 month out. He'll pay at least 1 month to somebody to find him a renter. So now he's at $9,500. Still a good return. He put $5,000 in. Okay, he's got to paint the place. That'll cost him $600. He's like, I'll do it myself on the weekends. That cost him earning money shooting photography, which is what he should be doing on the weekend. Okay, instead he's playing with his little puppy because he's tired. All right. He's got to mow the place. Mowing the place is going to cost $50, 50 to $75 every 2 weeks. I'll do that myself too. He should have been snapping shots of his little, okay? Water, gas, all that'll be paid by the tenant, okay? He had to run an ad, probably had to run an ad, might have spent $400 or $500 a year finding a tenant. But what if he goes 3 months? I mean, this looks like a good return. $5,000 makes him $9,500 a year. If everything goes perfect, man. If the person stays. But the person might move out. He might have all kind of other issues there. Again, it depends on what? The deal. And by the way, his time, the quality of his life is not even considered here. Does he have to go there and pick up the rent? Or the people late? What if they move in? Heads up, folks, people do this. Some people watching have done it. What if they move in and don't pay for 3 months and refuse to be evicted, and you end up in court and it costs you 10 grand just to get them out? Wow. And if you're going to be in the rental business, trust me, you will be in court. It's just when you're going to go to court. Okay? So you guys out there, you got non-accredited. You're a non-accredited investor. Okay? You got $5,000. Where are you going to invest it in? Okay, when you invest in Cardone Capital, it's cardonecapital.com/invest now if you're interested. We look for a triple on the money. We look for a 15% annual return once we sell the property, okay? I have exceeded these numbers for years. Now, I can't promise you our past performance is going to dictate our future performance. There's always a risk in all this. I'm taking a risk every time I buy a deal, but we created this fund so that you could, for as little as $5,000, start investing, and you could be doing what you should be doing on the weekend, which is whatever your skill is, because it's not collecting rent. If it was collecting rent, you'd have more than one house. All right, so check it out. This is how this works. You pay $250, about 5%, 5% a year is what we think most of our new deals produce per year, but by the time we sell, we think that'll be 15%, and our target is 2x to 3x return on the money. So 5,000 should turn into 10 grand or 15 grand over a period of time. All right. Now, you didn't do any work, you didn't sign a loan, you didn't find the deal, you don't manage the deal, you don't do all that stuff. It's not a lot of money. Okay, 5,000 turns into 10,000, but what's 5,000 right now doing at the bank? Okay, 5,000, just so everybody puts it in perspective, $5,000 at the bank today. At the end of the year, it'll be worth $5,077.50. So all you guys are like, oh, 5% is not a lot. 5%, being paid 5% in a great asset that can double and triple is awesome, dude. Okay, exactly. All right, so that's why I tell you, man, leave the stock market alone right now, folks. Leave it alone. I'm telling you, there's trillions of dollars sitting in ETFs and index funds right now. I'm telling you that there's going to be a rollover. There's going to be a rollover in the ETFs and mutual funds. Later, there people are going to be like, dude, that guy was like, what's his name? Nostradamus. That guy, I can't believe that guy predicted this. There's so much money sitting. There's so many little people. Okay, little people got $50, $500. There's so much money shoved into this one thing called ETFs. This will be, okay, when people panic, it will be devastating to the little guy. So if you're in those things, get out. You're better off taking the 5,000 and putting it in one stock that you believe in. Okay, it's not taking risk. To load up in one deal is not taking risk if you know the future of that company. And you should, by the way. If you don't know, you shouldn't be doing it. Okay? But you should be investing. You got to get your money out of the banks, okay? Then what you want to do is invest with somebody that does know what they're doing. Invest with somebody that is putting their money where their mouth is, okay? Don't just invest with somebody that was talking about something years ago or that's doing courses. Invest with somebody that's putting money into deals, time, energy, and money into a deal or something. Okay, let's talk to our callers.
You got Lorenzo in New Jersey.
Lorenzo, hey, congratulations. Thanks for getting through, brother. Do you have a deal or do you have a question?
I've got a deal.
Come on, bring it to me, man.
So it's out of Overland Park, Kansas, 156 units.
Yep.
20 years old.
Okay.
They don't have a list price. The gross potential, or the GPI, or GRI, sorry, is 2.96 million. The cap rate in that area is anywhere from 5.25 to 6.
Okay. So the 2.96 represents what?
2.296 million is the gross rental income.
2296 is the gross rental
Mm-hmm.
divided by 156 units. So they're
Yes.
getting $14,717 a year out of a piece of out of a unit. That's $12.26 a unit. First of all, I love Overland. I like Kansas. Okay.
Yes.
What's the location like of this property?
It's like 2 miles from a Starbucks. You got Whole Foods, Cheesecake Factory, so a lot of different, conveniences for the neighborhood. Sprint,
Hungry.
Black and Veatch,
Yeah.
for job situations. So it's really nice.
How far from the beach?
Got from Black and Veatch.
Any beach, dude. It's in Kansas.
I don't have the 1.5 miles.
There
Sorry,
ain't no beach in Kansas, man.
Black and Veatch.
I
Black
said
and
beach,
Veatch.
man. How far from the beach?
From the beach? That's
Yeah,
a long way
3,000
from the
miles.
beach. Yeah, that's a long way from the beach.
Yeah. Okay. So let's
But
do some
Black
math on
and
this deal.
Veatch.
That's fine. Not everybody can live on a beach.
Yeah, it's
like-
the middle of,
I like
it's
that guy's
Kansas.
laugh.
Kansas.
Yeah. Okay. They don't mention the NOI there by any chance, do they? Or you said it was a 5.25.
Yeah, 5.25 is the cap rate.
Yeah. So look,
So the NOI has it about 1.2.
I got 1.2. That's what I came up with. So 1.2 divided by 0.054. 22 million bucks?
That's what my numbers I ran myself. I had 22 million to 24 million in that range.
Yeah. Okay. So look, here's the per unit price is 142,000 a unit. The properties, I'm not looking. I don't have my computer with me, but yeah, I can just use that one actually. It's 20 years old. I'm interested. Now it's going to be about the location. It's going to be about rental opportunity. Is there a $50 bump here? But look, he's looking at a deal, folks. Okay, remember the $5,000 today. At the bank, here's your return. This doesn't even keep up with recession. If you put $5,000 in with Overland, Kansas City, in this deal rate, you put $5,000 in this deal based on the 5.25 cap. Okay, $5,000 will be worth $5,250 at the end of the year. You will have received $250 in cash flow. You're like, dude, that's not worth it. Yeah, but if he bought a great piece of property, if this is a great piece of property, and he takes and put $22 million, and he knows, hey, this is a good piece of property. He's got to put $8 million, let's see, probably $7 million down on this deal to buy this deal. He's going to finance $15 million, and you got to ride with him for $5,000. Okay, but let's just do the whole math on the deal. He should not be buying this deal if he does not think in the next 5 to 10 years he can get back $29 million for the property. We're looking to double our down payment right here. That's all I'm trying to do. I don't need to double the 22. This is why everybody has missed the real estate play, because you guys think this needs to double. This doesn't need to double. That needs to double. So he can literally reverse engineer. You can mathematically reverse engineer how much NOI do I need so the next guy can pay me $29 million and earn 5 to 6% a year. This is real estate, folks. I don't need it going up 50%. I need it to pay for itself while I wait for the property to grow up. It's only 20 years old. I'm going to be selling this when it's 30. This property's already been probably sold 3 or 4 times already. Everybody made money on the deal except the guy that couldn't keep it. The only people that lose money on real estate is people that can't keep the real estate. And the way to avoid losing money on real estate is to make sure it cash flows. That means whatever sits on top that piece of land, this is a piece of land right here in Ocala, Florida, or up in Overland, Kansas, right? Whatever sits on this piece of land, it needs to be surrounded in a location where people want to keep coming back to this well. That could be oil underneath there, and this would be a rig, or this could be a place where people live and you take care of them and you make it secure. It requires money. You got to keep spending money on this because nobody wants to drink dirty water. Right? So I need a property that's what? Clean, taken care of. You need to reinvest the money. People are like, dude, your deals only pay 5%. I'm like, 5%, bro? I'm investing the rest of the money in the facility to make sure it stays beautiful so people want to pay for it so that, you know, next month, the following month, this isn't like a one month deal. This isn't 10 months. I could be in this for 30 years. My kids might inherit this piece of property. So I need to keep taking care of the pool and the trees. So, dude, that's what I would do. I would go check that deal out. Do you have $7 million? Let me ask you that.
I do not, and that's why I brought this deal to you to see if it's something you'd be interested in as well.
Well, the deal's not big enough for me. I need them to be chunkier than that. I'm into chunky monkey. You know, if I'm gonna eat ice cream, I'm gonna give me some chunky monkey. Okay. Yeah, I just need it to be bigger. I need 300 units there. So you're at 156. So if I'm gonna do the deal, I need about double the size. Okay. No, but look, you could go raise them. How much money do you have?
Well, I'm invested with you right now. I put $10,000 to start, but I've got a group of guys. We're working together. Actually, we're looking at deals. In Kansas and Texas, because we both work out of those areas. So,
because bro, if you can make this deal work, I don't know Overland, so I don't invest there, right? I have to go there and do some research. If you're going to buy in Overland, Kansas, you got to go there. You got to study the market, know where the jobs are coming from, know about the crime records in the neighborhood, whether people are coming or going. I got to know the rent growth, the potential for rent growth. I got to know everything, so that I can predict, would somebody pay me $29 million? Because look, if I could earn 5% of my money, check this out. If I could earn 5% of my money on $7 million, that's $350,000 a year. For 10 years, that's $3.5 million. That means half of my damn 7 has been paid back on cash flow, and then I pick up another 7. I get my 7 back, and I pick up another 7 on top of that called profito. And look, I didn't rob anybody. I didn't sell them drugs. I earned $3.5 million here. Half of my down payment's already returned. And then I get my $7 million back. Now I'm gold and pick up another $7 million. So, man, you got to put 7 or 8 people together and figure that deal out. You got to get an LLC. You got to get a loan. You got to manage it. Somebody's got to take care of it. Somebody's got to cut the grass, fix the roof, fix the windows. But baby, this is the game, bro. You guys cannot show me that deal in stock, okay? Oh yeah, Grant, if you'd have put $7 million in Amazon, dude, you wouldn't be watching this show today. You'd be like off in a yacht somewhere that you paid for. If you'd have put $7 million in Amazon. But look, nobody did that back then because nobody believed in Amazon. So quit telling yourself, oh, if I'd have bought Coca-Cola. You didn't even live when Coca-Cola was founded. Y'all look at some dumb shit, man. If I'd have bought McDonald's in 1953, you were born in 1990, dumbass. Okay? If the queen had balls, she'd be the king. If you don't get your money out of the bank, you're going to die broke. If you don't get a second flow of income, you are going to work the rest of your life like a slave. And there's nothing wrong with working like a slave, by the way. I work all the time. You got to get your second money going. Let's talk to another caller. Hey, by the way, the gentleman that called in, ask him if I've ever missed a payment to him since he's been invested with me. He's gone? Okay, let's roll. Let's talk. Michael in the TX. What's up, baby?
Hello, Grant. So good
Man,
to talk
I got
to
some
you.
talent walking in here right now. People crazy. What's up, brother?
Hey, I have a question and and I found a property, but I just kind of need your advice on both.
Oh yeah, I like that. I like greedy people.
Yes, sir. A little bit about me. I'm an artist.
I don't want to talk about you. I want to know about the deal or the question. One of the two.
All right. So I have a house, and long story short, I have about $150,000 equity in it. I have been living in it for 3 years.
Yeah.
It's appreciated some. Should I take my equity out and do something smart with it? Because you said earlier, a few days ago, someone was watching that. As long as equity's not working for you, it's not working for you, right?
Yeah.
I also found a commercial deal that is $350 for the lot, and next door to it's $1 million, and the other next door to it's $700, and it's right off the main street. It's got cash flow opportunity, but I'm not sure if I should do a syndication with.
Yeah, I thought it was an empty lot.
No, it's a warehouse, and I just talked to the city about an hour ago, and they said I'd have to tear it down and build something to code there.
Yeah. How much you got to spend on the tear down and the rebuild?
I'm assuming I'd need about $600,000 to buy it, tear it down, and rebuild something brand new, and put it back up for sale at a premium.
Yeah. Yeah. I mean, look. You're speculating, man. You're like, I got to build this. Have you ever built anything?
Yes, my family's in construction.
Okay, but have you ever built anything?
No, sir.
Yeah. Like, what's that little game the kids play where they pull the little things?
Legos? Or Hot Wheels?
What, not Hot Wheels or Legos, dude? I mean, whatever. Okay. Like, look, when you guys start building stuff, just remember this. When you start building stuff, you're hoping that when you finish building, somebody's going to want to buy it. And you might be right, you might not be. But we're 10 or 11 years into expansion. Sooner or later, people are going to quit needing warehouses and stuff. And maybe I'm wrong on that. But back to your first question, the $150,000 in equity earns you nothing, okay? It's sitting there dead. Like it'd be like me having my kids sit around the house and never do any kind of work, nothing. They don't do anything for us. It'd be like sooner or later I'll resent it. $150,000 sitting in a house doing nothing, just sitting, delivers zero. Oh, Grant, it gives me a place to live. This money should be working right here. This money should be earning 5 to 10% a year, every year. He should be earning $7,500 to $15,000 a year on that money right there, and you'd be happy with it. And then go rent. Go take this same money right here and go rent a place. And take this $150 because I'm being paid a drip to get a score, okay? And hope that this turns into $350,000 or $450,000 in the next 6, 7, 8, 10 years. Everybody out there right now, worst investment you have is that dead equity sitting in your house that your mama convinced you to pay the house off, pay the house off. What you ought to do is, if you love the house that much, you ought to go buy like 50 of them just like it and rent it to other people that will fall in love with it. And the second thing I would tell you to do is, if you love it that much, then go borrow against the house. Get the $150 out. If you love it that much, go get over indebted in your house if you love it. Hell, I'm in debt to Elena because I love her. Okay, I'll go borrow money. I'll go borrow money to keep her. Hell, I have to. Okay, so if you guys love your houses that much, what you ought to do is go over borrow on them if you love them that much, and then we'll find out you don't love them that much. Go take $1 million loan on your house if you love it that much. I don't love it that much. If you don't love it that much, you ought to get rid of it and go get you $1 million. Okay, it might be the way you want to think about a house. How much you really love your house. I love my house. I love my house so much. Yeah, well, good. All right, next caller.
We got one more caller. You got Mike in Connecticut.
Mikey, what's up in the CT, bro? Oh, we lost him?
I got Trey in Oklahoma.
Trey, what's going on in Oklahoma, man? So good to talk to you because I hate the people in Connecticut that hang up on me anyway.
No, I'm here. Hello.
What's up, man?
Hey, what's going on, Mr. Uncle G?
What's going on to you, Trey? My little nephew, Trey?
Yeah, your dark-skinned nephew. Nah, man, so I got on the webinar, bought in the Cardone Cardone University, and question, how important is it to follow up and follow through?
You know the answer to that, man. You can't follow up enough. It's impossible. You cannot follow up enough. You can't follow up often enough. You could not be creative enough. And then the other thing is you got to follow through. There's no sport in the world where follow through is not required. I mean, all the great ones follow through. So you want to be great. You want to be great. You got to follow through.
Let Ryan know I'm following through later on today. He knows what I'm talking about with Trey Miller and Braden Ross. Love you, Uncle G.
Yeah, love you, man. Love you, Trey, my dark-skinned nephew. That's what he said, right? That's what he said, right?
I didn't hear that. Yeah, he said, yeah,
You should listen. You should listen a little closer. Elena's in the house. She just walked in, okay? Okay, we good? All right, look, folks, every Monday I come to you to talk about real estate because I know how it's important to you. It's gonna, and if you don't know if it's important to you, I'm telling you it's important to you, your family, your household, your future. Start investing in real estate. In every neighborhood in America and probably around the world, there is a piece of real estate waiting for somebody to take advantage of that piece of real estate. Find something that you can buy. Know what you're doing. If you haven't grabbed my book, grab it. You can get it at for free, by the way. What's the website? CardoneCapital.com/book. We come up with some fancy URLs here. That's how I remember them all. Hey, it's CardoneCapital.com/book. Okay, it's a big one. If you want to start buying real estate yourself, don't try to do it with just this book. Grab the course, GrantCardone.com/real estate course. Went over the top there. Okay, that course is 10 grand. You don't have to buy it. The book is free. You're going to read the book and you're going to realize, dang, I need to get in this game. Then you're going to want to buy the course. Okay. And by the way, if $10,000 keeps you from buying a deal, keeps you from learning, if 10K keeps you from learning, you're probably never going to buy a piece of real estate for $1 million. If you never buy a piece of real estate for $1 million, that would be a shame because anybody can do this. You don't need a degree. You don't need an education. I know guys with low IQ scores that have figured out this game. They're like, dude, it's just easy. But pick the right piece in the right location, make sure it cash flow, take care of your tenant, take care of your debt, and you'll be able to keep that piece of real estate until one day in the future it might be worth more money, okay? If you don't want to do any of that, you don't want to read, you don't want to learn, you don't want to invest, but you do want to get in the game, check out CardoneCapital.com/invest now, CardoneCapital.com. We are now open for both accredited and, my favorite people in the world, non-accredited investors. See you tomorrow on Power Players. Bang. Hey, if you like this video, make sure you go watch this video right now. I'll see you there.